Hey guys, what's up? Hopefully you guys are having a wonderful day. Today I'm going to show you a great forex trading strategy. I will simply show you how to analyze the markets properly and even show you a trade I took recently 3 days ago, and it's already $1,500 in profit using only one lot size. This was a great trade after the CPI news, but more about that a little later. Now I'm going to simplify everything for you guys because I know a lot of you are beginners. So we are currently on the monthly time frame on EURUSD, and the first thing we want to identify is the trend. And although it's obvious it's trending towards the downside, we can actually use the tool and mark it towards the downside. I feel like this is a good enough little trend over here because every time it touched one of these area zones, it respected it and went towards the downside. The idea is simple. It's been trending towards the downside for 11 years. Where is the obvious direction you want to be trading? That's the first thing you want to establish. So since it has been on an overall direction towards the downside, you ideally want to be placing only sell orders rather than buying. So since we know that, we want to mark areas of sensitivity. Where can we mark nice areas of sensitivity? Well, first we want to mark the support or the previous support that was broken. I'll talk about that in just a second. Previous area of sensitivity was here on the monthly time frame. Why? Because every time it touched one of these area zones, as you can see, it went towards the upside, right? Now, when there's support, there has to be a resistance. So we have to find our resistance level. This was a pretty good level, I should say. Look at this, a nice little area of resistance. Every time it touched, acted as a support level. Once support is broken, started acting as a resistance level where the candlestick started to shoot towards the downside. So we can see that from 2015, just over here, it started this new move towards the downside, a huge push towards the downside. So it's been 7 years now since the market has been in a consolidation, right? As you can see, every time it touched one of these areas, it went towards the downside, and vice versa. Every time it touched the support area, went towards the upside. Now, what's important? There was a break. There was a break over here with a bearish engulfing candlestick. Pretty much means that it swallows the blue one. It's a much smaller candlestick. The right one is bigger. It swallows. It's a nice little price action confirmation for us to shoot towards the downside. And if we just move our rectangle tool a little bit higher, just over here where the candlesticks meet, as you can see, the previous bottom of the candlesticks was over here. The candlestick body closed just here, but look at this one. It closed below the square, right? It closed below the blue square over here, showing that selling pressure is definitely there and likely gonna push the market towards the downside. And that's why after we saw this huge move or price action move over here, it did go down. It did go down. This is the monthly time frame, so a lot of pips. As you can see, 534 pips. It went towards the downside. So if you were selling EURUSD at that time, you could have made a lot of money. What's also important to understand, or a quick little mention, is this M pattern over here. An M pattern is usually a bearish price action move that happens, and once the neckline is broken, which is at the moment, it confirms that the trend will continue towards the downside. And because this is on a monthly time frame, pretty much the highest time frame there is in forex, this is the strongest confirmation. If the candlesticks over here actually manage to break this area zone, it's gonna go towards the downside, and that's what we are seeing. So what did we do? We analyzed the trend lines. We analyzed and understood where support and resistance areas are. We saw the M pattern. We saw the bearish engulfing candle break. It's going towards the downside. We need to head over to the lower time frames to understand what's happening. So this is the weekly time frame, and as you can see, the strong trend towards the downside is imminent. We don't need to draw anything over here. We can just kind of see where the market is likely heading. What I personally like to do is watch push exhaustion scenarios. As you can see, the markets move like this every single time. It comes back to the previous area of sensitivity. So after a push, there's exhaustion, previous area of sensitivity. After a push, there's exhaustion, previous area of sensitivity. After a push, there's exhaustion, previous area of sensitivity. You get it, right? There's obviously an area of sensitivity in a push exhaustion cycle. So because we know that, and because we know that the trend is towards the downside, where is the push exhaustion cycle at the moment? These are real-time charts. I'm not using the demo. 1 day, 6 hours left until this candlestick closes. Look at this. After a push, we had a push, right? An exhaustion happens. Previous area sensitivity likely is gonna be around this area zone. So this is where we ideally should look for a sell trading opportunity. So sometimes I recommend maybe you can mark this area zone just to know where this weekly area level is. You don't have to. I don't do it myself because I've been trading for a very long time. But for beginners, I recommend doing it. It's good practice. Let's go to the daily time frame, see what's happening. So look at this. Where we marked our weekly area zone, just over here, pretty much matches the daily candlesticks. So if we just drag it along a little bit, just a little bit lower, make this a little bit bigger, we can understand now where the market is actually heading. And on the daily time frame, we can start drawing more lines and understanding where the market will move next. So on the daily time frame, what can we see? We can see a nice little downtrend just somewhere over here. This downtrend actually extends for a while, right? And we saw moves push, exhaustion, previous area sensitivity, push, exhaustion, previous area sensitivity. The same thing over here. Little stop zone over here kind of started pushing in between the trend line sensitivity and the support. And as you can see, kind of push back. What happens? Price gets squeezed. It either pushes up or down. In this case, it went towards the downside. And would you believe it? There was another bearish engulfing candlestick confirmation for a break towards the downside. And once you see this kind of confirmation, if we entered here, boom, look at this, would have been a beautiful trade of around 300 pips profit if you catch this move. That's why I like watching the higher time frames first before I watch the lower time frames to understand where I should be placing my trades next. So we're gonna mark our support area level as well, just over here, because this was the previous low. If the market decides to come back down, it has to break this low before it starts a new push exhaustion push kind of cycle. Okay, now we should jump to the 4 hourly time frame and see what's happening there. So we can see the obvious little uptrend over here. We can draw the trend line like this as well. It makes sense because there's a lot of bounces. As you can see, every single time it touches, it goes towards the upside. So currently we have a nice little squeeze pattern happening at the moment, currently squeezing. And if it closes with the bearish engulfing candlestick over here, you know that likely the trend will continue towards the downside to retest this previous bottom level. So currently seems like the market is pushing up a little bit. It might be pushing up towards this previous area zone over here, or this big area zone that we marked on the monthly time frame as well. So how do we know where the market is likely heading? Well, I like to use the moving averages as my main tool of trend confirmation and reversal. So I like using the 20-50 moving averages, and as you can see, the 4 hourly time frame currently both are down, which is typical. That's what I expect on the 4 hourly time frame, since we had this huge move towards the upside. However, I like looking at the daily time frame as well. And if we have a look and come back to the daily time frame, the 50 moving average is already acting as a good area of resistance. As you can see, this was the previous area zone. I talked about the push exhaustion scenario. This is what's happening, and the 50 moving average is not allowing the candlesticks to break past it. If it does, we might want to use the other moving averages, which is the 200 and 100. In this case, the 200 moving average is still quite far away, so we're not going to be using it, but the 100 moving average is in around this area zone over here, because the candlesticks likely after a few days will consolidate, maybe drop down if it respects the 4 hourly bearish engulfing candlestick that I talked about, or it's just gonna maybe dip down towards this area zone. Anything can happen, but with each candlestick, the moving average on the daily time frame will move towards the downside little by little. The moving average is going to be a huge strong roof for the candlesticks, and the moving average, the 100 moving average, is very important and could actually say, no, that's enough, we like the price level and we are shooting back down. And this could be a nice little scenario. So at the moment, I'm not sure whether it's gonna break the 50. If it doesn't break the 50 in the next 5 hours on the daily, there is still likely bearish pressure incoming. And if not, and it actually breaks the 50 moving average strongly, breaks the area of trend line that we have, we could be aiming for a nice little trade towards the upside for a pullback trade. Now, I don't like trading pullbacks. I already said that in many of my live streams that I do. I don't like trading pullbacks because we know, as we discussed, the overall trending direction is towards the downside, and euro has been on the 20-year low. And going off that, euro has been on a 20-year low. Where the price is currently at the moment, it hasn't been this low since 2003. So of course the bear pressure will continue to dominate the bull pressure without a doubt. So my thoughts for euro USD is pretty much it's gonna shoot towards the downside eventually. If it doesn't now, it might be shooting towards the downside once it reacts towards the 100 moving average over here, if it actually manages to break the 50. So if I ever wanted to actually enter a short trade on euro USD, where would I enter? Well, it's simple. We need to break at least 1 hourly moving averages. If we have a look at the hourly time frame, currently it's formed a double top pattern. There's the neckline, so we need to break the neckline over here. What does it mean? So currently forming an M pattern. If it comes back down, it will be formed. There's going to be the neckline. So if we break that neckline past the push exhaustion scenario, we are going towards the downside nicely, and that could be a nice little trade over here, especially if we manage to break the 50 moving average. Look at this short little position over here. 2-to-1 risk to reward, around 80 pip take profit, stop loss around 40, so 2-to-1 risk to reward. Depending how it goes, how it moves, we don't know the future, but it looks like if it does retest this area zone, I'll definitely be taking this trade in my VIP trading services, which you should join, by the way. We have a huge Discord community. Okay, enough of euro USD. Now let's understand the USD Japanese yen trade that I took. So look at this daily time frame trending towards the downside, right? I took this trade on 8th of August. This is where I took this trade because I did believe that the US dollar will actually fall short, and that's what happened. CPI data came out negative, US dollar dipped down hard, and that's why we are seeing this kind of push towards the downside over here. The market on the 4 hourly time frame, as you can see, actually had a little trend of 20 and 50 moving averages, but that is okay because you can use different moving averages at certain different situations. So as you can see on the 4 hourly time frame, if I open up the 200 and 100 moving averages, which is the purple and green line, as you can see, the trend never broke the 2 moving averages. Once it broke past here, I knew after such a push, look at this push, this is a massive push towards the downside on the 4 hourly time frame. There had to be an exhaustion. Exhaustion happened where? To the previous area of sensitivity. In this case, 100 and 200 moving average lines acting as a roof to the candlesticks. What happened? The candlesticks started to respect this area low, strong resistance zone, dip towards the downside, could have made you a lot of money. So if we look at USD Japanese yen, look at this trade, the wick over here nearly touched my take profit level and now dipped towards the upside a little bit, which is okay, $1,500 profit, but I am not closing my trade yet. Where am I going to close it? If we have a look at the 9 moving average, if it manages to break the 9 moving average, I'm gonna close it. If not, and it kind of bounces off, the candlestick never closes above this purple line over here, push exhaustion, and continues to move down, I'm gonna keep my trade running and maximize my profits that way. So this is the simple way, this is the simple strategy, this is what I use every single day to profit in the forex markets, and hopefully you guys enjoy. There are many trading strategies and many videos in my channel, so you may want to check them out. You can ask questions in the comments for each trading strategy. Everyone trades differently, so there's no real wrong or right answer when trading forex. Just make sure to find the right one that works for you, and you will be definitely at some point a profitable forex trader, especially if you join my Discord group where we do live streams, education, and even forex trading signals. If you like any, we are smashing the forex markets. Let me just show you one of my trades I placed today. This is NZD Japanese yen. I send this signal out on my Discord group and currently around 50 pips in profit, which is great, right? So make sure to join. If you like it, smash like, and peace out, guys. Have a wonderful day. Stay safe and goodbye.